Lately, it seems that most markets are exploding. Especially in recent days, we've seen a large volume entering the cryptocurrency market. As you know, our strategies are always adapted to any type of asset or time frame, whether traditional stocks, forex, commodities, and of course, cryptos. In today's video, we bring you step-by-step how to combine two indicators that will provide us with entry and exit signals, as I said, for any type of asset and time frame, but which even managed to surpass 92% win rate on assets like Bitcoin, Solana, Ethereum, Cardano, and can be used especially on time frames of 15 minutes, 30 minutes, and 1 hour. That is, perfect for all those traders who prefer intraday style and quick profits. Welcome to Trader's Game. And yes, as you can see, we have created a new Telegram community, completely free, where we will be posting all the updates about what's happening in the financial markets, as well as trading operations, analysis, and much more valuable content. You can find the link directly in the description. Now, in this case, we are on the hourly time frame of the Bitcoin-US pair. As always, we are in a real market, not a replay, and we go straight to the indicator section where we search for the so-called SSL channel from mTricky. Be careful because when searching for SSL channel, there are several options, but it is this specific one we need to select. The first thing we can see are already these fixed signals accompanied by intermediate moving averages specifically calculated for this indicator. If we go to the settings section, we can see how we could modify several things, and in style the same thing. In this case, I recommend leaving it by default, but you also have the option to adjust these variables depending on the asset you're trading, always taking into account its volatility, whether it's more or less volatile. With this indicator alone, we could already carry out operations profitably and consistently by simply adding our basic trading knowledge, such as a retest of a breakout, taking intermediate liquidity, structural order block, previous structure. The same happens in this area here, where again we have that pullback, and the price starts to drop after having taken that liquidity in the structural order block. Obviously, we could adjust this even more to the upper structure and choose the previous maximum point of the whole range to pinpoint that possible entry. As you can see, we would have perfectly taken that upper liquidity here, and then it would give us the fixed sell signal, where we could place the stop loss above or directly at the liquidity take point and look for a 1.1 ratio. Since this is an hourly time frame operation with a relatively distant stop loss, another option would be to look for a shorter stop loss just above these intermediate bands and already look for 1.5 ratio trades with a second take profit at 2 or 2.5. This is a bit up to your preference. Since we are in the hourly time frame, another very simple indicator you can add is the RSI, the good old relative strength index, because it will help you filter out false entries or at least know when it's the first breakout, and therefore if we should wait for the pullback and enter on that second contact. As you can see, just when we get the first signal, that breakout signal, the RSI is almost reaching the overbought zone, which makes it quite risky to enter at this point. However, if we wait for the pullback to the same zone and it gives us another buy signal, we see that the RSI is in that middle zone and it could have room to go higher. The structure is complete. We place our stop loss below the intermediate bands and the first take profit at the nearest liquidity take or structural order block, or directly called previous structure highs, and let the second take profit run upward in this case. Exactly the same thing would happen here. In this first breakout, the RSI is already in the extreme oversold zone, which makes it very risky to enter. However, if we wait for the pullback, again, the second sell signal is in the intermediate RSI zone, ensuring a better entry and taking those profits. As I said, it's an indicator, a strategy that works very well on 1 hour, 30 minutes, and even 15-minute time frames for those who like to trade faster. However, for that, we remove the RSI, drop to 30 minutes, and now we will add another indicator, the NSD Candles, which we will need to filter signals in lower time frames. In this case, in the settings, in the data input section, we will have to change the MA line length from 55 to 100. We hit accept, we already see the change, and surely this watermark-like thing might appear at the bottom. Simply install unchecked tables, and it will disappear, much more comfortable. Another option that the ham candles give us is that they color the bars in different tones, depending on the strength of the movement. As you can see, we have from bright green, which increases in intensity, to for the negative ones, yellow, orange, stronger orange, until reaching intense red. This is very important because it will help us filter those false signals. Again, as you can see, we have this sell signal, but it is not intense red, but rather yellowish orange. So we should not take this sell signal. Something we can see quite logically because the breakout was upward, and then we simply have the continuation pullback of the trend. But as I said, without needing an RSI or even having basic price action or breakout trading knowledge, the indicator itself tells us that this downside breakout is not very strong. So, where should we take our trades to have a higher win percentage? Very simple. Every time we see one of these signals, we analyze the rest of the variables that the indicators provide us. In this case, we have that upward buy signal when it just crosses a completely bright green candle. The intermediate bands also change from red to green, and in the other indicator, we also see that we are in a completely bright green area. Not in this yellow-green, but it seems like the movement is strong, and this moving average has already turned to bright green at this point. We simply take our entry, place the stop loss below those green bands, and look for trades in this case, since we are in 30 minutes, with a ratio of 1.1, 1.25, or even at most 1.5 to 1. Why do I say this? Well, because you know that cryptocurrencies are very volatile assets. In traditional markets, you can directly look for a 2.1 or higher ratio in these timeframes. But in cryptos, unless you're in 15-minute timeframes or lower, it's always better to look for slightly lower ratios and secure those profits. You can always let a part of the trade run, but you have already secured those profits. If we look around here, we have that pullback happening, and well, here, we would have even exceeded the 2.1 ratio. But on the return, it would have taken us out if we had the stop loss below the bands, because the price always comes back again to take that liquidity if it didn't take it at first. And if we adjusted the stop loss to this point, it would have taken us out, and then the trend would have continued. That's why we take those profits first, or even if you want to take advantage of the full trend, it's best to place the stop loss just below the moving average that changes from red to green right at the entry candle. And in that case, we could secure a more long-term trade and try to capture more of the full trend. As you can see, in the end, it's almost 4% up in spot. I recommend playing with these ratios and the stop loss depending on the time frame you're in. As I mentioned, in 1 hour and 30 minutes, I prefer to take profits with 1.1 ratios and with a tighter stop loss. But this, as I said, depends on your management and risk aversion. On the other hand, when going down to the 15-minute time frame, you can also help yourself with the classic MACD to assist you in interpreting better entries and exits. For example, in this one, we have the buy signal right on this candle, which is already completely bright green. And if we look at the MACD, we see that the histogram is rising. And besides, the MACD signal lines haven't crossed yet. So we can interpret that we could have a good entry, place the stop loss below the previous structural lows, or directly below that moving average, and again take those profits with a 1.1 ratio to secure gains, especially since we entered when the MACD was already in a fairly high positive zone, avoiding complications if the price reverses, like it did up here. As you can see again, we have a divergence between the price and the MACD a little later. We have a sell signal that, as we see, comes out perfectly. We place the stop loss just above where the red moving average is at that point. All indicators are in bright red, and we place our first take profit at a 1.1 ratio. If we look at the MACD right in that area where it gives us the fixed sell signal, we already had that downward MACD line crossover, which again supports our good decision to enter short. A little later, we have another signal. In this case, it's a buy signal. But what happens? We see that in the MACD, we are in a zone of indecision or lateralization that has been reflected in the price in this small range of candles, as you can see. Almost all of them show us that great indecision in the market. And besides, it's already in a rather high zone, while in the histogram, we see that a great divergence has formed. While the price is rising, the MACD histogram is falling. Furthermore, it coincides exactly with the candle that gives us the signal. so we know this would be a fake out. However, the next short entry does make more sense, in this case, interpreting all the market data I've just explained. It could indeed be a good entry zone, especially for more experienced traders who draw all these conclusions. We could do a fixed trade based on our price action study, but if you're newer, don't do it because the indicator wouldn't be ready. The candle is still green, the moving average is green, and we are not in a bright red zone. In the long run, you don't need to risk taking trades that the indicator doesn't mark for you, because simply by being disciplined, you're going to make more money in the long run. Here, a little earlier, we have another one. In this case, it's completely perfect. We have all the indicators aligned, and also the MACD is going down. We place our stop loss, and as you can see, we could even take advantage of the entire downward trend, at least with that second take profit that we would let run. And below in the description, you have the direct link to our website, Dalgo Traders, where you can get the best indicators on the market for trading in Forex, cryptocurrencies, stocks, or any type of asset. Supported by artificial intelligence, these indicators are capable of adapting to market information and identifying the perfect entries for your trades on a daily basis. If you're not yet as profitable as you'd like to be, switch to Dalgo Traders indicators and you'll be able to achieve it while trading any type of asset. Additionally, in our community, you'll be accompanied not only by our mentors and professional traders, but also by the more than 500 people who are already taking advantage of this opportunity.